everyone, and welcome to another exciting edition of What Does the Required Want from Me Anyway? So I'm using a new tool now where I've literally got well, you can't see it, but I've got my tablet as like a second screen for my laptop. And you would think as a millennial, I would have known about this ages ago. But anyway, we live and we learn. Okay, so today's edition, we are focusing on financial accounting. And while financial accounting is not as varied and as specific, I mean, it is still specific, but it's not quite as exciting and varied as auditing requires. Nevertheless, I do still see them trip people up, so we want to make sure that you don't fall into any of those traps. So we are going to be taking a look at the different types of requireds you can see in a financial accounting paper. Okay, so we are going to start off with a fan favorite, and that is correcting journal entries. So it says prepare the correcting journal entries to account for the sales made by the selected stores via GoFresh during December 2024. Okay, now the thing here is correcting journal entries. So what do you guys like to do? You like to say what was done. I'm going to reverse that. And what should have been done, I am going to process that. But I hate to tell you this, these are not considered correcting journal entries. So what you have to do is you need to look at what was done and what should have been done, and you have to find a way to align them. So if you're dealing with a situation where you worked out that they processed an interest expense and they processed too little, okay? So let's say you worked out that the interest expense that should have been processed was 600,000. However, the interest expense that was processed was only 550,000. Okay, you are not now going to go and reverse this and process this. No, you're going to say, how can I get this interest expense to equate to 550,000 Rand? Well, how do I normally recognize interest expense? I'm going to debit interest expense, credit my liability, right? So now if I've done too much of that, how am I going to take away some of it? Well, I'm going to reverse some of what I've done. So I'm going to debit my liability and I'm going to credit my interest expense with the difference, which is the 50,000. Okay, so that is how to do a correcting journal entry. If you try to just reverse what was done and process what should have been done, you are going to find yourself with barely any marks, okay? Because the emphasis is on correcting, looking at what was done, what should have been done, and thinking about how to correct it, not how to reverse it and start over. Okay. I just also want to point out some important things when it comes to financial accounting specifically, things that are going to help you with exam technique. So one of those things is timelines. Another one of those things is perspective. Okay, so you want to know, am I looking at it from the parent or the sub? Am I looking at it from the lessor or the lessee? Am I looking at it from the issuer or the lender? Because the perspective is going to change your answer quite substantially. We know, for example, that lessor accounting, very different to lessee accounting. Okay, even with a parent or a sub, could also be looking at it from a consolidated perspective. Okay, timelines are going to help you keep track of all the information. So as you read the information, you start to populate your timeline. So let's say the financial year is 1 Jan to 31 December. Something happens in April. As you read about it, you populate it. So there was an acquisition. Okay, then let's say in July, there was PPE disposal. As you are reading these things, you are marking them up on your timeline. This is going to be a good way for you to keep track of all the events that happened so that you don't miss out on any marks. It's kind of like a completeness check. Okay, so timelines, perspective, and then another one that saved me, circling numbers. That's a big one, especially in a big consolidated cash flow question, which I will do a video on. And the last thing that I want to mention is what financial year, because sometimes they can ask you for the prior year. Sometimes they can ask you for the current year. Sometimes they can ask you for the prior year and the current year. Okay, so these are some things to keep in mind when it comes to financial accounting. They also help with tax as well. Okay, so looking at the next question, prepare all the journal entries necessary to account for all aspects relating to the solar panels. Okay, so this is now telling you you can prepare journal entries from scratch. You've been given a transaction, go ahead and prepare the journal entries. Now, when it says relating to the solar panels, okay, obviously it's going to depend on whether it's inventory or PPE, whichever asset account it's going to go to, but let's assume that it is PPE. Right? So let's assume it's imported. You are going to record the import, all aspects of the import, right? So it's going to be the amount you recognize to PPE. Maybe there's a payable amount that you're also going to recognize, okay? And you're going to have to apply the correct exchange rates in terms of IAS 21. You might have to recognize depreciation as well, since they're saying all aspects relating to the solar panel. Okay, maybe it gets damaged during the year. Now you have to go and record impairment as well. Okay, so remember, if it's asking you for all aspects of a certain thing, think about all the things that affect that one thing, because otherwise you're going to lose out on easy marks. The next required says prepare the pro forma consolidation journal entries to be processed by the group to account for the subsidiary in its consolidated financial statements. Okay, now pro formas are obviously a different type of demon altogether. Okay, so the way to think about pro formas is to think about what you do in the separate financial statements versus what IFRS 3 or IFRS 10 tells you to do. Okay, so you're going to look at what was already processed, and then you're going to say, okay, well, let me look at what was processed. Let me think about what should be processed from a group perspective, and let me figure out a way that I can align them. So, for example, when we record the initial investment, right? So, in the separate financial statements, that initial investment in the subsidiary is recorded at cost. So, we debit an investment in subsidiary and we credit bank. Now, IFRS 3 says, no, we don't have this, okay? We need to consolidate this into our parents' financial statements. So we think about what needs to be done, right? And that's where we've got the equity, we've got the goodwill, we've got the NCI. But now this is already sitting in the subsidiaries' books, or in the parents' books, sorry. This is already sitting in the parents' books. So how do we align it to what should have been done, where we credit NCI, debit goodwill, debit our net asset value? How do we align that? Well, we have to go and reverse this. Okay, so that's why we end up crediting the investment in subsidiary when we are consolidating. Okay, because we have to reverse what's already sitting in the parents' separate books. Okay, let's take a look at a few other requireds. Okay, moving on. Okay, so now we have got calculate the total amount for employee benefits to be disclosed by SAMM in the notes to the statement of profit or loss and other comprehensive income. So they're not asking you for the disclosure, but they're asking you to calculate the elements that go into the disclosure. Okay, so this is where you might want to open your illustrative examples and see if there is an example of what is typically found in that disclosure. And once you've looked at your illustrative examples and you've found what's in that disclosure, you are now going to know what you need to calculate. Now, I cannot emphasize enough when it comes to anything with calculations, which is basically everything, almost everything in financial accounting, you need to reference your workings, please and thank you, because your marker is not going to go and look for your workings. If they can't see where a number comes from, they are not going to investigate your paper. You are just going to lose those marks. Okay, so it's something as simple as, and I'll make a separate video on it when I do the cash flow video, because I just want to show you an exam technique perspective. So keep your eyes peeled for that one. Okay, so I'll show you how to do that in a separate video. Okay, so here we're just calculating an amount, and we are emphasizing that they're asking about employee benefits that are disclosed. So we need to know what that looks like so we know what we need to calculate. Okay, the next one says discuss the correct accounting treatment for the unpaid insurance claim of 2 million in the accounting records of SAMM in terms of IAS 37. Okay, so they're telling you the standard that you need to discuss in terms of. Okay, so they're saying, look at this unpaid insurance claim and tell me the correct accounting treatment looking at the standard. Required D is a little bit more of an interesting one because it says discuss 5 concerns that you may have relating to the accounting treatment and financial disclosures. So accounting treatment and disclosures. Because remember, your accounting treatment is essentially what's going to be on the face of your financial statements, whereas your disclosures are going to be in your notes to the financial statements. So yes, they are separate things. Okay, for each concern, provide the treatment that management should have followed. They limit you to certain sections, all right? So that means if you go outside of section 2, 3, and 4, you get no marks because it's out of scope. Okay. So you are essentially looking for inaccuracies, inconsistencies, and errors in application and or non-compliance with IFRS. So they're kind of telling you what to look for. Where might things be recorded inaccurately? Where are things sort of inconsistent? So maybe they've said one thing in the notes, but then done another thing in the face of the statements. Okay, where's there errors in application of a standard or potentially non-compliance where they've just disregarded the standard entirely? Okay, exclude items not disclosed in the extract. So they're basically telling you work with what you're given. Don't try to go out of scope of what has been provided in the extract. Okay, so you're essentially going to work your way through whatever is in section 2, 3, and 4, and you are going to identify concerns. So when you identify a concern, you're essentially going to say, what's wrong? And that is going to be your trigger. And why is it wrong? That's essentially going to be linked to the IFRS. Either there's an inconsistency or an inaccuracy or non-compliance entirely. Okay, so that's how you're going to get the mark. And then what else? We also have to provide the treatment. Okay, so a lot of people will forget this very, very key piece. Okay, so what's wrong? Why is it wrong? And what is the correct treatment? And that is because they've asked us to provide the correct treatment. Okay, let's take a look at our next batch of requireds. Okay, so now we are dealing with discuss whether BOFA has control over HIRO for FY 2021. Okay. Ooh, interesting one. Nice 20-mark question. So you are going to go and look at your IFRS 10, which you've hopefully got nicely flagged, okay? Because it's going to tell you when a parent has control, especially when it's not due to the majority of voting rights, okay? So it's going to refer you to 3 requirements. I think it's power, variable returns, and then power over those returns. Okay, so basically you've got power over the subsidiary, there's a right to variable returns, and then you can use your power to influence those returns. And this is where really good flagging will also pay off a lot. Obviously, you need to be comfortable with what is in the standard, but for the more nitty-gritty things, you need to have good flagging. I think I do have a flagging video on IFRS 10 that I will upload. Okay, so very important when it comes to a discussion question. You cannot just recite the standard. You have to have principle plus application, which means you need to mark up your scenario to be able to find the application piece. It will be easy to find the principles. You've got your standard right next to you, but your application will come from how well you have marked up your scenario, which is how well you've used your reading time. Please, 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 I will make a separate video on that. But a lot of people lose marks in discussions because they word vomit, they theory dump, they regurgitate useless information without proper application. Okay, and it's only useless because you haven't added the application. So application, application, application. Okay, then taking a look at the next required, it says, assuming that HIRO should be consolidated, prepare the consolidated statement of changes in equity. Okay, do not provide the total, the share capital, and the NCI. So all that you were really left with here was your retained earnings, and this had some foreign transactions, so your FCTR. Okay, because it had a foreign subsidiary. Now, with a question like this, the question is asking you for a statement, which means that if your answer does not have a statement, you are not going to get any marks. Even if your workings are 100% perfect, the required didn't ask you for workings, it asked you for a statement. So what does that mean? That means you are going to write a skeleton before you do anything else. As soon as you start this question, you are going to write a skeleton statement. Okay, consolidated statement of changes in equity. Obviously, I don't want to waste your time here by writing all of this out. Okay, right for the year ended, da 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 da. Okay, then we're going to have our retained earnings. We're going to have our FCTR. Okay, and what typically goes into a statement of changes in equity? We've got our balance at, and I think this was 1 July potentially. Let's just assume it was. Then we're going to have our profit. Okay, we're going to have our OCI movements. We're going to have dividends. And we're going to have our closing balance at 30 June. So this is what you set up. You set up a skeleton. Obviously, you will write out these things in the interest of time. I'm not doing that. Okay, but you are going to create this statement. And then on this statement, you are not just going to have an amount, let's say 1 million here. Okay, you're not just going to have that amount. You are going to have how you calculated that amount if it's not a given amount. Okay, so you're going to have working one. And then in your workings, it's going to be nicely referenced to working one. Then you might have another amount here for profit, and you're going to label that working two in a different color. Then in your workings, you're going to have working two and how you got to that amount. Okay, so in a question like this where you ask to prepare statements, you need to reference your workings properly. Okay, next required says to us, with reference to the transactions listed in note 3.3. So they're scoping us to note 3.3, calculate the current and deferred tax implications for Sticky, the company, and prepare the correcting journal entries. Oh, there we see correcting journal entries again. And let me tell you, Psycho likes them, so best you learn how to do them. Okay, so we've got to calculate current and deferred tax, but let's contrast that to the next one. Prepare the consolidated tax reconciliation to be disclosed in the consolidated financial statements. Okay, this is important because this question is asking you to calculate current and deferred tax and then do the correcting journal entries, okay? The next required is asking you for the tax reconciliation that is disclosed in the consolidated financial statements, which means, again, you are going to look at your illustrative examples book for what goes into that tax reconciliation. Okay, it gives really, really nice examples. So look in IAS 12 of your illustrative examples, and it's going to give you really, really nice information. So similar to this one that we just looked at, this is asking you for a disclosure, which means if you have all the perfect workings, but it's not in the form of a disclosure, you're not going to get any marks. Okay, so make sure you have a skeleton disclosure of the tax reconciliation, and then your workings are nicely referenced. Okay, let's take a look. I think I've got one more slide for us to look at. Okay, so here we've got briefly discuss whether the agreement between IGS and LE Batteries contains a lease as defined in accordance with IFRS 16. Now, again, we've got a discussion question. They are referring us to IFRS 16, and we need to discuss whether it contains a lease, okay? Which means you are going to hopefully know this quite well out of your head, but if you need to, you're going to go to your IFRS 16 definition of a lease, and you are going to do principle and application. So what comes out of the standard, and couple that with what's in the scenario. So again, how do we conquer discussion questions in financial accounting? We need to mark up our scenario, because otherwise you're going to waste so much time rereading, and that is the last thing you want to do. Okay, taking a look at the next required, it says discuss the appropriateness of the provision in respect of contract A23 in these separate financial statements. Provide calculations. Okay, so this is essentially where you are going to go and look at what has been done, and you're almost going to criticize what was done. So you're going to use your knowledge of a provision under IAS 37. You're going to look at what was done, and you're going to say, was this done correctly in terms of IAS 37 in the separate financial statements? Remember, one of the tips that I gave you is you always want to make sure whose perspective you are looking at this from. Is it the parent's separate financial statements? Is it the consolidated financial statements? Is it the subsidiaries' separate financial statements? Okay, and then the last required says to us, discuss the performance obligations that will result from the sale of the season ticket in terms of IFRS 15. Assume that it meets the requirements of a contract. So essentially, it's telling you step 1 is met. Now, that means do not discuss step 1 because they're telling you it's already been met. Now, you're also not going to go on a whole tangent about when to recognize revenue, because they're saying discuss the performance obligations. So in IFRS 15, we have our 5 steps, and essentially step 2 is identifying our performance obligations. Okay, so that's exactly what we're going to do. We are going to base our discussion on step 2. So I was unfortunately rudely cut off at the end of my explanation over there, but just to sort of sum up what we've spoken about. So this required is specifically asking you for performance obligations, which means that you are going to discuss step 2 of IFRS 15. I don't know why these annotations are now disappearing, but I hope you're keeping up. Okay, so it's not asking you to discuss in terms of IFRS 15 how we should recognize the revenue. No, it's asking you specifically about the performance obligations. So I hope that this was helpful. Remember that application is really key in financial accounting. They don't care to see if you, when I say they, the market doesn't care to see if you can recite the standard. They want to see if you can apply the standard. So particularly in discussion questions, the importance is going to come in marking up your paper. And I'll do a separate video on that. This was just for understanding what the required wants from you. I hope you enjoyed it, and I'll be making one on tax and management accounting and finance real soon. So stay tuned.